Let me get in Mr. Sachindranath, Group CEO at Religare, as well, who joins in right now. Mr. Nath, afternoon. Welcome to the show. Prashant this side. Would you at Religare would you be looking at a license, a banking license?
Well, as you know, Prashant, out of our three-pillar business model, integrated financial services play in India have been our core model for a very long period of time. And we have been expanding in India extensively. Today we cover more than 600 cities, 1,500 branches. In order to achieve our vision of building this whole integrated play, banking is a core part of that. But having said that, we would still wait for final guidelines. And as long as we can achieve the two objectives that it is value accretive to our stakeholders, and simultaneously we can achieve the policy guidelines and policy objective, then we would surely try to get the license.
Okay, so you will be in the fray for a license. So you confirm that.
As long as, as I said, as long as once we see the final guidelines, as long as it is beneficial for our stakeholders, and we feel that we have the ability to achieve what policy guideline expects new banking license holders to achieve, which is financial inclusion, large unbanked area to be covered, very high capability of management, separation of governance and capital. Most of it we think so that we will be able to achieve. Then if once we get the confirmation internally and then we'll be able to convince the regulator that we are good candidate, we would surely try.
I sense from your comments that there might be issues which actually might come up, which may stop you from doing that, from applying or trying for a license. Is there anything in the document which has been put up by the RBI today, as of now, which might come in the way?
No, I'm saying it is when I generally read the discussion paper, whatever is the expectation actually are fairly favorable for a firm like Religare, which means that we are already operative in tier 2, tier 3 town. We have a very large management team. The governance and capital providence is segregated between in the Religare. High capital adequacy is available. We are very well capitalized companies, and we can provide capital very quickly for a new. And I think so we have been building business on very innovative front, and also our global footprint give us access to global markets, know-how, domain knowledge. So I think so we would try to, once we see the final guideline, we'll try to combine all this knowledge, know-how, management, governance structure. And I think so that we would be able to achieve what the guideline or what the policy for structure would ask the new banking license holder to achieve.
Right. Mr. Parekh, just coming back to you and coming to, I guess what will be a hotly debated issue, and you alluded to it, the entire corporate ownership thing. And the RBI itself says that foreign experience with corporate ownership in the banking sector hasn't been fantastic. What they are saying as checks and balances is, for starters, these industrial houses should be diversified. Secondly, there would be stringent limits on transactions between the bank and other group entities. And in some ways, there would be a ring fencing of the bank operation. Great suggestions, but none of them very easily implementable or perhaps monitorable, if I could put it that way.
Yes, I mean, I suppose, in the last 3 decades, I mean, after the initial 4 decades ago when the nationalization happened and today, things have changed dramatically. I mean, I suppose the corporates understand the whole aspect of governance far more, in greater order than it used to be in the good old days. So that's one important deviation. The second important critical part is that, let's say, with a proper framework, an element of self-regulation, rather than a continuous monitoring from the regulator. I mean, if one were to really read the recommendations or the discussions coming up in the discussion paper, it's still a discussion paper, but when you read those, you're getting an impression very clearly that a lot is going to be left to the person who's a promoter who's going to put up the bank. He has to make sure that he keeps away from the day-to-day management or from the management at all. So there is a complete deviation between capital and management on one side. B is independent director. C, several other measures. I mean, those do require, the person who's applying for the promoter who's really going to put up a bank to put a very high order of internal mechanism rather than the regulator worry about the monitoring. So that's the first. At the time when the due diligence on the corporate application will be made, I am very confident the regulator, one of the very key things that the regulator will look at is the governance record, the ability on the part of that group really to keep the shareholder value within the balance sheets. I mean, if they've really moved the value between the balance sheets, if they have done anything which can be considered as a doubtful practice, then I'm sure they will stop that application at that stage itself. So, I mean, a certain order of so-called self-regulatory mechanism has already been put in the discussion paper, added to which I'm sure will be more detail that will soon come out when this discussion paper gets converted into a policy document.
Fair enough. So that's on the corporate ownership side. Mr. Nath, just coming to a point that you alluded to, what would be the requirements from these new banks in terms of financial inclusion going into unbanked areas? Because the RBI's paper and also their commentary in recent times very clearly suggested that they want the banking sector to widen, but widen in a manner that it doesn't get concentrated in a few urban areas. It goes beyond that to the unbanked areas. So should there be stringent requirements in terms of how much you need to do in terms of rural coverage, what percentage of your branches need to be in unbanked areas? I'm not saying that there will be, but if there are those kind of stipulations, does the entire prospect of a new banking license become a little bit less attractive because those areas come with costs attached?
You're right. See, you should realize the fact that for corporates of the players, the business houses like us, it's a commercial activity. But for anyone who's framing policy, they have to achieve the policy objective because they are fiduciary liable to achieve those policy framework. So I don't think so that it will be an easy path. Only people who have the ability and the courage to treat the banking and a standalone business, have the courage to bring innovation to reach to the non-banked area, have the courage to bring new technology and go to those areas and make those businesses profitable. I think so they would be able to get their licenses. And I don't think so by just saying that going to a rural area or a non-banked area is an unprofitable business model. That's why you should allow us to operate only in urban areas is not sufficient. There are models, there are methods to work towards that and still make profitable business out of that. Otherwise, the current state of number of banks which are already available in the country, what is the need of granting new bank licenses? Government can't work, or regulators can't work for generating just cash profitability for private sector. Those private sector also have, while they have responsibility towards their stakeholders, they also have simultaneous responsibility to make sure that they achieve the policy framework and work for the interest of all. So, and I think so we have been working on this for a very long period of time, and I think so by combining technology, combining innovation, experimenting on new models, you can make profitable businesses both in urban and as well as non-urban or tier 2, tier 3 towns. We have been doing that. If you look at our entire retail brokerage business which we expanded, we never came to markets like Bombay and Delhi first. We first went to tier 2, tier 3 towns because that's where, in fact, we have found it to be more profitable and more interesting because you have less competition. You have you are the only one who is providing service over there. So for some who has not experienced it and who are not willing and ready to experiment within themselves, they would find it very challenging. But I think so there is a way around it.
Right. Mr. Parekh, do you think the proposition of granting NBFCs a banking license would impede on the other objective of getting new players into the banking space, or no? They'd work on different paths, both towards the same goal.
They're towards the same goal, but at the same time, the discussion paper is also suggestive of some of the other routes which may be possible. For instance, exactly a new license is not created. For instance, the discussion paper talks about, the promoter acquiring an RRB, for example. So an RRB is already an existing bank. It has its own geography. It has its own loan portfolio. And then, of course, it may not be showing the same amount of profitability that the normal commercial banks would be. But at the same time, the infrastructure is available. So the discussion paper is also suggestive of that route. It is suggesting that a new person, a person who's getting into the banking business and he wants to get to the rural customers faster and make the banking system available to them, then they can really consider acquiring the equity of the RRBs as well. So, I mean, they go together in some form, the new licenses on one side and the expansion of the footprint, they will certainly go together, I thought.
All right, we'll leave it at that. Mr. Parekh, Mr. Nath, good talking to both of you. Thanks for coming in on a short notice. Appreciate your views. And I think for